for joining us for a Tax Practitioners Board webinar. My name is Lun Lak, and I'm joining you from Gadigal country. I respectfully acknowledge the traditional owners and custodians of country throughout Australia and their continuing connection to land, waters, and community. I would like to pay my respect to them and their cultures and elders past and present. To begin, I have a few quick housekeeping messages. To obtain a copy of today's slides, you can visit our webinar resource hub at tbb.gov.au/webinar-hub. To ask a question, simply type your question into the Q&A. And to find the Q&A, simply move your mouse over the screen and a range of icons will appear. You can also use the chat function to speak with other participants, but if you need a response from us, make sure to use the Q&A. I also want to note that we do have a lot of people online today, so we may not get to all of your questions. However, we will answer FAQs via our webinar resource hub, so keep an eye on our website in coming week and we'll share responses to the commonly asked questions there. Today's webinar also counts towards your continuing professional education or CPE, and you can claim 1 hour for attending. In relation to claiming your CPE, we will issue an attendance certificate to those of you online for webinar today. In today's webinar, we'll look at our personal tax obligations compliance program. What are personal tax affairs? Complying with Code Item 2, which states you must comply with the taxation laws in the conduct of your personal affairs. How Code Item 2 relates to fit and proper requirements. Consequences failing to comply, including our recent case study. The ATO's approach to debt management. Tax practitioner community engagement. ATO's personal obligations compliance. Then, to finish, we'll answer some of common questions we received during the webinar. Also, one of our compliance directors, Christian and Rosette from the ATO, will be on hand to respond to your questions as we go along. So please submit any questions you have via the Q&A. Now I would like to introduce you to our speakers for today, TBB CEO Secretary Michael O'Neill and Adam O'Grady, Assistant Commissioner from the ATO Frontline Operations, Lodgement, Payment and Data Risk and Strategy. So thanks for joining us, to you both. I'll hand over to Michael to kick things off.
Thank you, Lon, and good afternoon, everyone. Particularly welcome to Adam and our ATO colleagues. Great to have the people from Frontline Operations who've got that direct expertise on the ATO's debt recovery program to share with you today. One of the things we wanted to focus on is the personal tax obligations of practitioners and how that is addressing not just legal obligations, but community expectations. It's an important thing for all of us as citizens, but particularly for those of us who work in the tax industry to be setting the right benchmark, the right standard for those around us. And so the focus on tax practitioners is really important. As you probably know, the government's announced a range of reforms to improve professional standards across the tax system, across the regulatory system and with the profession. And some of those standards will be included in an expanded code. That expanded code will pick up and reinforce the kind of standards that are expected of tax practitioners, BAS agents and tax agents, and all of us who work in the system. You probably know that the ATO's debt book exceeds $50 billion. And this is obviously a concern for all of us, a concern for the community. And it's one of those things where the TPB and the ATO have a shared risk. And I guess the invitation today from all of us is that this webinar engages you in that journey. We know that most tax practitioners are doing the right thing themselves and by their clients. But today is a call to action for you, for your practice, for your colleagues to take stock of your tax obligations, particularly your debts, and to take any action that's necessary to remediate that. This call to action recognizes the influence that you have more broadly in the system. the influence you have in encouraging your clients to make a priority about their compliance around their debt arrangements. The support you can give to clients in, for example, seeking a payment plan if there's an issue, and where the clients are struggling, helping them to engage with the ATO. Before we go any further, just check, Adam, any introductory comments you'd like to share?
Thanks, Michael. First off, thank you very much for having me join the webinar, and particularly to all the tax practitioners that have joined. I think this is a great opportunity for me to be able to speak directly to all of you. Just drawing on a couple of Michael's comments there, I'm sure you've all seen the ATO and some of our messaging where we are really focused on our debt book and our collectible debt book. In fact, earlier today in our this week's newsletter, you'll see the ATO newsletter, you'll see an article about our approach to payment and debt. It is over $50 billion and has continued to grow since we really took a pause on some of those firm actions over the COVID period, which was absolutely right for a period of time. However, what we're seeing is our clients, and particularly our business clients, not returning to what we would consider acceptable payment behaviour. And really, today's an opportunity for you all to learn a little bit from me about what that strategy looks like and what are some of the things you are going to start to see, which is different to how the ATOs maybe traditionally approach this. But also some of the focus areas that we in the ATO will be taking on tax practitioners and the tax practitioners yourselves, what influence you are having over your clients' behaviour, but also in your own personal tax obligations. And that obviously links directly into your other responsibilities and accountabilities under the agent regime with the Practitioners Board. So I'm looking forward to it, to talk more about what our strategy is. But again, thank you for joining us today.
Thanks, Adam. And just want to again repeat the shout out. We've got people from Broken Hill to Brunswick and all parts of the country in between. So thank you very much for coming along and engaging in this discussion. We'd like to give you some data in a moment about an indicator of this personal tax obligation problem. We've got a sense from Adam around the $50 billion and growing debt book. But before we get into facts and figures, I think the principle of the matter is the key part, and that is that the whole rock, the foundation of trust in you, in your practice, in the tax profession, is built on your expertise, your services, your integrity. And it's really evident, that trust, in the tax profession generally. We have clients who are very closely attached to their tax agent, their BAS agent. I was speaking to my mother-in-law, she's 94. She's had the same tax agent for over 30 years. Most practitioners are doing the right thing and managing their compliance across what the ATO describes as the 4 pillars: your registration responsibilities, correct statements, timely filing, your debt management. They're obligations which are obviously under the tax law, but also under the Tax Agent Services Act, and they apply personally and they apply to your associated entities. This is a really important topic to talk about at the moment because there's increasing community expectations of all of us. A few years ago, we worked with the ATO on a similar project to address personal tax obligations. We took graduated approaches to nudge people to get into the right compliance mode. And in some cases, we had to take very firm action. And we'll talk about what that looks like under the code. Often that firmest action is when the personal tax obligations link to other risks. And we'll talk about a case study from the Administrative Appeals Tribunal that illustrates some of that work. Tuan, would you mind just taking us to the slide, please? So we have, on the one hand, most practitioners doing the right thing. And our latest analytics from September suggests there's a good number of tax practitioners who are falling behind in their debt and lodgement obligations. There's those 2,000 practitioners with debts exceeding $10,000 without a payment plan, 5,000 with one or more outstanding lodgements. And in that group, there's around 700 which have overlapping obligations outstanding, both the lodgement and the debt issues. So we are specifically calling out action by those people who are in that group. And at one level, we say, well, that's a number far too high. That's 10% of our registered tax practitioner population. And it's more than 10% in terms of people who have key influence in the system. So it's important for all of us who are doing the right thing that we, the TPB, the ATO, continue to remind, nudge, address those people who are falling behind in their obligations. So when you're reflecting on that call to action, could I ask you to think about what that means for your clients? Because sometimes we see a pattern where tax obligations are falling behind in relation to the practitioner. There's a spread of that behavior in relation to the client's affairs as well. So last December, we put out a message reminding people of their obligations. Great to see many people brought their obligations up to date. Since that time, we've been directly contacting practitioners with outstanding tax obligations where their lodgement, their debt is behind. And again, we have some good response rates. If you've received correspondence, if you've been engaged by the ATO or the TPB, the very worst thing to do, as you know, for your clients, is to ignore that nudge. The best thing to do is to engage with the ATO, with the TPB. Where people engage with openness and transparency, they're always going to get a better outcome. And that's the positive side of engagement. And the downside is firmer ATO recovery action, firmer TPB action. And we'll go through some of those things which can be, in the very worst cases, land in terminations of practitioners' registration. That often is the case where the personal tax obligation breach is linked to those broader compliance issues, failing to engage honestly with the board and providing false or misleading statements to the ATO as well. We'll go into what the code requirements are in a moment, but Adam, just checking whether there was anything you wanted to add in terms of the ATO's strategy and firmer action.
Yeah, so Michael, our strategy, particularly on payment and outstanding debt, we have a particular focus on business debts. And, you know, we talked about the $50 billion earlier. That is primarily made up of self-assessed debt from businesses, of withholding, GST and super guarantee style charges. So amounts that really should be passed on to either the Commonwealth or employees in their super fund. As we've done that analysis and then also looked at the tax affairs of the tax practitioner group, you're right. Most of the tax practitioner group are very compliant. If they have debts, they've entered into arrangements with us. Unfortunately, there's a small minority that are largely ignoring, I would call it, their obligations for payment and lodgement. And in many cases, we're actually seeing that poor lodgement in their client base as well. So where you've got agents with poor personal compliance with their obligations, we actually see that in the client base of that agent. So I think that in and of itself is concerning for us, and something that we're looking to address. Not only the client's behaviour, but also the agents' behaviour, and how their attitude to some of these issues is trickling down to their client base.
Thanks, Adam. And I think that's a really important point, isn't it? That we're not talking about debts that are in contest here. They're debts that have been self-assessed, the withholding, PAYGW, the GST, the super, and sometimes the non-payment of those debts has knock-on disadvantages for workers, for retirement benefits, for other benefits as well. So I think the next step in our journey would be to just say, well, what are those legal requirements under the code, under the Tax Agent Services Act, which are over and above the tax obligations of each of us as citizens? We'll go through those in a moment, but it raises some of those things that we are always aware of. Are we acting competently? Are we showing reasonable care in the application of the tax law? Are we acting lawfully in the best interests of clients? There are questions in some of these cases about someone's honesty and integrity, and whether somebody's fit and proper. And where personal tax obligations impact on honesty under the code or under the law, and fitness and propriety, those are the issues where severe disruption can happen to practices, to tax practitioner registration. So going through those obligations in some detail, we can go to the slide, please, around personal tax obligations. We talk about personal, but of course, it includes those entities about which you have control, directly or indirectly. You might be a partner in a partnership. You might be a director of a company. There might be family trust arrangements. There might be superannuation funds. So the stock take, the call to action, is around your personal and your associated tax affairs. You're in best control of understanding the degree of your association. And in the worst cases, we see tax practitioners who not only have a personal tax debt, but their associated entities are also in that default position with the ATO. So the work that we're doing here really underpins that link between you and your clients and the tax system working. In the last couple of years, there's been some discussion about some practitioners, some firms not doing the right thing, and that has knock-on effects in terms of integrity of the profession, integrity of the system. And the converse is true here. By taking action, by engaging with the ATO, we've got the ability to step up in terms of individual integrity, compliance, building the goodwill, the reputation of your practice, but also supporting the reputation of tax practitioners generally. So the positive side of engagement is obvious, and we'll talk about some case studies where people have taken the wrong steps, I believe. So what you need to do to comply, the compliance with personal tax obligations really involves that quick quiz, running your ruler across the registration requirements in your entities. Are my lodgements up to date? Have I provided accurate information to the ATO? The false, misleading statement, or am I making those full and true disclosures? And debt management. If I've got an outstanding debt, have I got a payment plan that's been approved? I'm sticking to that payment plan. Compliance with personal tax obligations, obviously, as Adam says, picks up the super guarantee responsibilities, the PAYG, the GST responsibilities, those amounts that are collected by you and businesses on behalf of the community more generally. I think it's very important that in dealing with these issues, people who are in trusted positions like tax practitioners are engaging with the ATO openly and honestly, because we've seen some situations where people have got themselves into a personal tax obligation default position, and then they've compounded the problem, increased the risk by providing misinformation to us or to the ATO. When it comes to those obligations, we'll take more seriously the failure to account for those monies which are owed on behalf of the community. Those outstanding personal tax obligations related to PAYGW, superannuation amounts, GST, where there will be knock-on consequences for workers, for superannuation people, other benefits in the system. Could I just check in there, Adam? Any thoughts or comments you wanted to add about that?
Yeah, Michael, I think one point I'd add, because I don't know how well known it is across the industry, but when we talk about the personal tax affairs, you have mentioned this a few times, it's all those entities that you actually have control over as well. As part of the work we're doing with our strategy, we are looking more holistically at an individual's affairs and the entities they have control over. So it includes their personal affairs and as directors of companies and members of partnerships. And one agent in particular, is actually two agents, had their own personal affairs, but also had multiple companies. And those companies had many outstanding lodgements, many outstanding debts. And when we grouped them all up and actually had to explain to them the consequences and some of the actions that we were going to take as a tax administrator, such as director penalty notices and potentially garnishees if they didn't quickly address some of that. But when we also pointed out some of the requirements under the Tax Agent Services Act and fit and proper conduct for those entities, it really, I guess, surprised them somewhat that that was actually a requirement. And that very quickly, I can say very quickly, resulted in payment to the ATO. So they actually had the payment there. They had the ability to pay. They'd chosen not to pay, but more hadn't actually considered holistically all of those entities. So I think probably my message to the group is it's not just about your personal tax return, it's those entities overall. And we're seeing that as we engage with these agents on their affairs and their entities, that is somewhat surprising to them, that that's actually a requirement that they need to adhere to.
Yeah, thanks, Adam. That's a really good point. I think it's useful to go to the connection between Code Item 2 around personal tax obligations and other obligations under the Act, especially that requirement that practitioners, in order to be registered, have to be fit and proper persons. That's one of those preconditions of trust. It recognises that privilege position that practitioners are in supporting their clients, as well as engaging with the tax system, having online service privileges, having access to business data. So fitness and propriety is not just a registration requirement, it's an ongoing requirement, and it applies to each individual tax practitioner. And in the case of company registrations as tax practitioners, each director of the company, in relation to partnerships registered, each partner needs also to be satisfying that fit and proper test. Fitness and propriety it picks up personal and professional conduct. The next slide, please. And it goes then to those old-fashioned notions of good fame, integrity, and character. The code talks about those positive aspects of your professional conduct, and it also picks up your personal conduct, because sometimes the personal conduct of a tax advisor can give insight into their honesty and integrity, and can also impact on the reputation of the profession as a whole. I think the fitness and propriety is one of those things that we pride ourselves on as professionals. That's the positive aspect. The other thing that TPB has to consider, and this is relevant to risk, and Adam's point before that strategies are graduated depending on the risk, the TPB also considers misconduct that has occurred over the past 5 years. Has the agent been convicted of a serious tax offence, an offence of fraud or dishonesty, a breach of the promoter penalty laws as driving a tax exploitation scheme, or promoting a scheme in breach of a ruling? Is there a bankruptcy issue, external administration? Is there a prison, a term of imprisonment? So there's a look back period over the past 5 years. And some of these factors, as you probably know, are relevant to some aspects of the new code. The extended code, section 45, talks about what are the relevant factors that practitioners need to share with their clients. The purpose, the principle of section 45 is that clients can make an informed decision about who they want as their tax agent and whom they can trust as their tax agent. Clearly, issues about political, sexual preference, mental health, other health conditions, they're not relevant to that decision. And Section 45 then steps out those things which are important to clients. And we'll talk more about the extended code in a moment. The consequences are something that we should be considering as well for you, clients, for your practice. But I think today's session is primarily about awareness of the ATO's debt strategy, a refresher of the personal tax obligations of each of us, and particularly those in trusted positions as practitioners, that because this is serious, because there are large numbers and large debts, the ATO and the TPB are working very closely in this collaboration. Most important of all, the key message I'd hope you'd take away this afternoon is you sharing in that collaboration. Your stock take, your checklist, if you like, where are you, your associated entities up to in your tax compliance? And most of you will have nothing to do as a result of that checklist. But if there is something, then we'd ask you to act and act promptly. The ATO is increasing its escalation, the TPB likewise. We've already engaged with hundreds of tax advisors, and we'll be escalating, taking firmer action in relation to those matters. The penalties and sanctions available under the Tax Agent Services Act, there can be a caution, an order for remediation, the suspension of registration for a certain period of time, for example, suspending registration until the tax practice gets its tax affairs up to scratch. And in the most egregious cases, the termination of registration. So the ATO, the TPB approaches are tailored, responsive to the behaviours, to the degree of risk. And the tax practitioners who engage with us, with the ATO, with transparency, with cooperation, they're always doing better in risk management. They're always going to have better outcomes. So the main consideration, I think, for each of us is not so much this caution or that sanction. The main consideration for tax practitioners is how do you maintain your good reputation? How do you maintain the excellent services that your clients rely on? the business support that you provide to so many people, how do you maintain your compliance and uphold the integrity of the system overall? Just before we go to Adam again for a bit more detail on the ATO strategy, can I just talk about a quick case study? This is an appeal against a decision of the TPB where we needed to take a sanction, which was a termination of registration. The agent, in this case, failed in their personal tax obligations and compounded that failure by those additional risk items, false statements to the ATO and the TPB, lodging SMSF returns, self-managed super fund returns, without the required audit. A key indication of risk in this case was the knock-on effects for those SMSFs. Because of the failure to lodge without audit, this tax agent had acted in a way that put those clients at risk. Put those clients at risk of compliance of their super obligations and penalties under the CISA Act. The facts in relation to Ms. Clifford were set out in the AAT. The tribunal confirmed the TPB's finding that there was a breach of the code and a breach of those broader requirements in the Tax Agent Services Act. The tax agent had an ATO debt of $145,000 and failed to engage. There was no payment plan. They made false statements to the TPB when they went through their registration renewal process to say that they were fully compliant. False statements to the ATO, as I said, in relation to the SMSF issues. And so the tribunal confirmed the code breaches and also found that those breaches were so serious that it went to the heart of this person's honesty and their fitness and propriety, and confirmed that this person shouldn't be trusted to be registered as a practitioner anymore. So I think that's just an example of where the PTO issues can mount with other matters to paint that higher risk. And they're the cases that we really need to take action on, because that creates the level playing field for most agents doing the right thing and also most businesses doing the right thing in Australia. I'm going to pause there and throw to you, Adam, for your comments, please.
Yes, thanks, Mark. I think this is a really interesting case, and it is something that we are seeing within the ATO itself. As we are looking at some of these personal obligations of agents, we are seeing further issues uncovered as part of the review into how they're conducting their affairs, which obviously results in us making referrals to the TPB to investigate for them. So really the non-payment and non-lodgement is often the tip of the iceberg with many of these situations, particularly those that are choosing not to engage with us on those sort of items. But I might go into more of the ATO approach to some of this and share this with you. And obviously fairly brief comments, but I do want to largely start to draw out for the practitioners here some of the changes that you may have already seen, but that you will continue to see across your client base. So if we go to the next slide, and the first one is we're taking a differentiated approach to our debts. So we touched on this earlier, but where businesses owe GST, income tax withholding, and super guarantee, they will be prioritised for our treatment and some of our firmer actions. These amounts have been withheld from an employee's wages. have been withheld from consumers or ultimately should have been paid to the employee's super account. And our expectation is that they should be paid on time every time for those amounts. So those that are owing those amounts, those debts. Business clients, whether they are small, medium, large, businesses of all sizes, and choosing not to engage with the ATO will actually see much firmer and faster action from us. Some of you will have seen and have even provided feedback to us about the number of reminder letters that you may get for clients, reminding them to pay their debts. There's often multiple periods of reminder before we would move to some of these functions, but we are reducing the number of reminders we issue. If you're in business, you're incurring and withholding amounts, we will continue, or we will move to these firmer and faster actions to really make directors, in the case of corporate entities, acutely aware of their obligations to recover these amounts. As part of that, as practitioners, you will see differentiation in who we contact. So if you've got two clients that both owe us $20,000, we may contact one of them and not the other, and that may look different and unusual to you. But we will be basing that on who are the highest risk clients based on what their prior behaviour and issues we've seen with them. We go to the next slide, just on our tailored engagement. So as part of that, as part of our approach, those tax products, we will move to a faster posture. But we will also tailor our engagement based on how the debt was incurred and also past compliance behaviour. So amounts that are self-assessed and someone falls behind for the first time with an outstanding amount payable, they would be given more time to try and correct and bring things up to date. Those that have showed consistent and repeated attempts to avoid their obligations, not engage with the amounts, or particularly had amounts raised through compliance activities, can expect a shorter time frame for when we will go and engage with them. The other part of this approach is those that have demonstrated fraud or egregious behaviour, so really repeated non-compliant behaviour, will be subject to very deliberate consequence strategies. Those taxpayers that are deliberately trying to rip the system off, we will pursue very firmly, very fast to recover any amounts that they've got incorrectly. The final point I'll mention here, and I think it's a really important point, is that taxpayers who are struggling but engage with us and actively engage with the ATO will be given the opportunity to self-correct and bring their debts under control. So this can include things like entering into a payment arrangement with us. And we do see hundreds of thousands of entities enter into those arrangements with us, and much of that can be done online. I think the call out I would make to all of you in supporting your clients that are in payment arrangements or maybe looking to enter into an arrangement is they have to adhere to that arrangement going forward and the amounts due and payable in the arrangement we set up. But in addition, they need to maintain their future obligations as well. So that means keeping up to date with future lodgement obligations, keeping up to date to future payment obligations as well. Unfortunately, what we see is someone enter into a payment arrangement, stop meeting the payment schedule, and then also disengage with other obligations or future obligations. in those circumstances, they will be subject to our firmer actions. But the key call out to all of your clients and you as practitioners who are helping your clients, we really do encourage you to engage with the ATO if you have outstanding debt amounts that you need to service. Move on to our approach with the tax practitioner community. So we, in the ATO, we understand there is various business models within tax practices. Some agents, actively support their clients with their payment amounts. Other agents sort of leave it up to the clients to manage themselves, and that's fine. Both of those models are fine. But as part of our approach in doing this, we will be actively engaging with tax practitioners. We'll be providing, and I mentioned the newsroom article that was published, I think earlier today, outlining some of our approach to payment, and really giving you hopefully the tools and messages to support your clients that owe amounts to it, so that you can either act on their behalf and engage with the ATO or encourage those clients to do that. As I've mentioned, we do expect agents to support their clients to fulfill their payment obligations. But really, I guess my call to action for this group is pointing out to your clients that if they do not fulfill their payment obligations, if they don't engage with us, they are going to be subject to these firmer actions. And trying to put your head in the sand and just hoping it will go away, will ultimately result in, at the extreme end, things like insolvency and bankruptcy and things like that. As much as possible, we want to try and avoid that as an outcome. For those agents on the line sort of saying, well, debt is not really my problem for my clients, I accept that is a view of some, but you can expect us to engage directly to the client. So in cases where we cannot get engagement through the agent on outstanding amounts, we will look to escalate directly to the client and deal directly to the client to recover these amounts. My overall summary of our debt strategy is, if you owe some of those pass-through taxes and you're refusing to engage, you will see the ATO acting much firmer, much faster to recover those amounts. And we have that obligation as tax administrators to ensure that everyone is paying the right amount of tax. But I also would ask you to think, and I'm sure most of the practitioners on this call are compliant with and up to date with their lodgement and payment obligations. But if one of your peers is not passing on the withholding or GST to the ATO, they are effectively getting a massive free kick that's not available to you that is doing the right thing. The real impact of people not paying amounts and passing it on to the ATO is that they are getting a massive competitive advantage over everyone else in their industry. So we have not only our legal imperative to go and collect these amounts, there's also this ethical obligation I take seriously as well, to make sure that all businesses have a equal opportunity to compete in that level playing field across the population. I might just quickly touch on the personal tax obligations from an ATO perspective, and some of my comments I have already mentioned, and we can go to the next slide when we're ready. But likewise, we have a view and that agents are integral to the tax system. We need agents and well-functioning agent industry to support the tax system. And as part of that, we also expect and require agents to model compliant behaviour. And that's across all four pillars of the compliance, so registration, lodgement, correct reporting, and payment. Not only is it the ATO requiring agents to do that, but there is a community expectation that if agents are there engaging with the tax system, making a living off the tax system, the community expects agents are also paying the correct amount of tax as well. For those agents where your personal obligations are not up to date, and in particular, I call out the lodgement and payment obligations, you will be subject to our treatment approaches. Not only you as an individual, but those entities that you have control over. Where we can't get you to quickly correct these obligations, whether that's through a lodgement or through a payment arrangement or payment, those sort of things, we will refer you to the Tax Practitioner Board. And as part of that referrals, we expect to increase the number of referrals that we will be making in this financial year. And as that last sort of case study called out, we're actually seeing not only other issues with some of these lodgement and payment obligations, but it goes deeper into other behaviours that are a concern both to the ATO and the Tax Practitioners Board as well. My call out to any agent on the line that maybe has an outstanding lodgement, has an outstanding amount, engage early, engage as soon as you can, deal with the outstanding issue. While you may be there thinking, oh, they haven't come for me yet, maybe not, but we will eventually get to everyone. And I think as Michael has highlighted previously, the consequences can be pretty significant from a registration perspective, let alone the ATO consequences, whether that is different penalties and interest and other actions that we can and do take on this sort of behaviour. I think at that point, Michael, I might pause there and see if you had any other comments with what I've just covered there.
No, Adam, that was really helpful, and I think some key takeaways for me around these programs are responding to the increasing government community expectations. They're addressing the reputation of individual practitioners as well as practices and the profession as a whole. It's our shared responsibility to make sure the tax system is working with integrity. And also that point around the competitive business environment. If I'm not complying with my obligations, I'm putting an additional burden on you. So I think those points are well made. I guess we could just check in with you, Julie, to see if there are any key questions that are coming up from the chat, please.
Absolutely. Thank you both for those great presentations. We have had a lot of questions coming through. So I might put the first one to you, Adam. I'll let you have a little sip of water while I ask you. But this one is just around the firmer action that the ATO are taking on debt recovery. And the question is, what has driven the ATO to take firmer debt recovery now at this time, especially considering the cost of living crisis and other stresses that are out in the environment for practitioners and the community generally?
Yeah. Thanks, Julie. So there's a couple of elements to that. We saw a degradation in people meeting their obligations with payment. We had some very generous settings over COVID, but we've got, I said $50 billion worth of collectible debt owing. So this is debt that there is no impediment for us to go and collect. Overall, the ATO is owed more than $100 billion in revenue. We fundamentally have to address that and collect those amounts. One, with that revenue, if we can't collect it, is not available to the government for all the services that we all enjoy and benefit from. So there's a fundamental cost to the community not being able to do it. But I think for me, more importantly, and probably even more importantly in a tough cost of living situation, these debts are actually having an impact on other entities into the system. So if the ATO is not taking these debts and these issues seriously and not looking to address them as one of the biggest creditors in the economy, if we're not doing that, these businesses are allowed to run and operate and accrue more and more debt. And not only does the Commonwealth miss out on those funds, but other creditors get wound up and lose amounts that they've offered on credit. Employees lose super entitlements, which will affect them for years to come in their retirement. All those sorts of things. Businesses can artificially undercut lots of their competitors, which just puts pressure on everyone. So really, for the ATO, this is about playing our role in ensuring that everyone has a level playing field, not just those that choose not to. And my final comment is the vast majority of businesses do comply and do pay on time or pay very shortly after the amount. It's those that are choosing not to and deliberately not paying that we have to take this action against.
Thanks, Adam. That's a really good point to end on there. And thank you for clarifying that as well. Michael, I know that you sort of briefly touched today on the new code obligations. So I've got a question for you in relation to that. And this one is the new code obligations, do they require tax practitioners to disclose a tax debt to their clients if it's managed and is under a payment plan or arrangement with the ATO?
Yeah, thanks, Julie. It's a really good question. The new code obligations that are been made in a determination, a type of regulation by the government, they don't take effect until 2025. For most practitioners, they won't have any impact until 1 July 2025. For larger firms, 100 more employees, the new requirements have effect from 1 January 2025. Whilst the determination is out there, the TPB's providing some guidance, some practical guidance, and we hope to issue that tomorrow, Julie, for as drafts, and those information sheets will be out there. They walk through some very practical examples of what practitioners are doing now and what they will need to do to comply with the new obligations. Why that's important is the principles in the new obligations are very aligned with the existing requirements in the code. Some of them are restatements of confidentiality and conflict of interest, but just in particular about engagement with government. Some of them are new about record keeping requirements, and there's a new requirement about keeping clients informed. The things that need to be informed to clients are set out in Section 45, and they don't specifically deal with this issue of debts. And in the situation where your practice, your client has a debt and they've engaged with the ATO and they've got a payment plan, they're keeping up to date with the payment plan, they're up to date with their other obligations, that's an example of good mitigation. That's an example of good engagement. And we're very supportive of those scenarios. So in short, the new code obligations won't come into play until 2025. But I think the example you're talking about is a best practice example. If people get into debt, and this can happen, where people are open, engaged with the ATO, and they've got that payment plan, they're on the right track. Thanks, Julie.
Thank you, Michael. I just might add as well that we do actually have a webinar this Friday where we are discussing some of the changes to the code and the new obligations, and we're actually focusing on false or misleading statements on Friday. So I encourage everyone to register for that webinar. So you can just jump onto our website at tpb.gov.au/webinars and you can register for that session there. And we also have some other sessions coming up in the next couple of weeks that also touch on similar topics. So just to keep you informed there. Adam, I might ask the next question of you, and this is in relation to identifying debt. And we had a question asking, how does the ATO identify if a tax practitioner has a debt? And also, if they do identify that, do they share that information with the TPB?
Firstly, we are aware of who the tax practitioners are in the system as part of the administrator, so we can identify where a practitioner or related entity does owe an amount to us. Just because you owe an amount doesn't mean we automatically make a referral to the tax practitioner board as part of this. We will try and engage with you. We will look to come up, as I said, with those payment arrangements and other ways to enter into an appropriate approach. If we can't do that, then we will make a referral to the board that where have identified conduct that is concerning to us as the administrator. But in addition, we do have data sharing powers with the TPB as well, which allows the TPB access to elements of our data as well to see those tax practitioners that may not be up to date with their lodgement and payment obligations.
Thank you for that. Michael, just another question for you now. If the tax practitioner has a related entity that goes into administration because they've got an unpaid tax debt, will the tax practitioner be considered not to be fit and proper, possibly having their registration terminated?
Yeah, thanks, Julie. That's an interesting question. I think one of the circumstances that the TPB must consider in coming to an understanding of fitness and propriety is that question of insolvency, and it can come up in the context of bankruptcy for individuals or different insolvency arrangements that might apply to corporate entities. One of those is administration. So where practitioners have an associated entity that's in administration, then the best thing is for them to have early engagement, obviously, with the ATO to manage those debts and engagement with us. Because where there's a voluntary administration and an orderly wind-up of a company, that's down one end of the risk spectrum. And the other end is where promoters are deliberately stripping and sinking companies in the Phoenix sense to avoid their tax obligations. That's the high risk end where both the ATO and the TPB will take firm action and very quickly. Thanks, Julie.
Thanks, Michael. Adam, I might put the last question to you today, and this one is saying that appreciate the ATO's strategy of forwarding debts to the Recovery Corp. However, we have received multiple complaints that clients are unable to contact them and they don't return calls. What is the strategy to try and resolve these issues for tax practitioners?
Firstly, I apologise on behalf of the ATO if that is the experience of tax practitioners. We do use Recoveries Corp for some of our debts to have them supplement our ATO staff members. If that is a regular feature, firstly, I will take that back and look into that further. But I'd ask tax practitioners to provide that feedback through to the ATO in those circumstances where that is occurring, whether that's through our complaints mechanism or other mechanisms. We certainly expect that if Recovery Corp are following up a debt, that they will answer the call and will be able to engage with those clients at that point. So that is our clear expectation. So if that is not the case, I'm very happy to investigate further. But as I said, I'll take that back to and investigate that myself. But providing that direct feedback to us where things are failing gives us the opportunity to correct that for the future.
Thanks so much for your comments on that, Adam. Really appreciated. I might just go to you both now. Just any final comments, a key takeaway that you might have for everybody. So, Adam, I'll just go to you first. Thank you.
I think my key message to all the practitioners on the call today is the ATO is changing our approach. We are becoming much more active. We are taking a much more deliberate approach to those that owe us money. Whether it's yourself or whether it's your clients, my biggest piece of advice is do not ignore the situation. Engage actively with the ATO. That way we can avoid having to take some of these actions going forward. That's, if everyone can take that away, I think that will be well worth the hour we've spent together today.
Thank you. And Michael, over to you.
Thanks, Julie, and thanks everyone for your time and your questions. There have been some really good questions rolling through the chat, and we'll pull those together in the compendium. I've got 4 big takeaways: that the debt book is bigger than $50 billion, and that's a burden on the community and the services that we expect. The second one is that 10% of tax practitioners have outstanding tax obligations. And because of those risks, the TPB and the ATO are committed to a collaboration to address them. And today, the invitation is to you and to you, your practice, your associated entities, to join that collaboration, to do that stock take of your own tax obligations, and to take action if necessary for yourself, your entities, and to support your clients in that journey as well. Thanks, Julie.
Thank you so much, Michael, and thank you, Adam. Just to finish up today, I would like to just share a quick bit of information on how to stay in touch. Just to highly encourage you to follow us on social media. We have LinkedIn, Facebook, and Twitter. You'll find our most up-to-date information there. You can also subscribe to our TPB e-news, and we also have some future webinars that you may be interested in attending, which we touched on today. Also, our YouTube channel has a very comprehensive library there of past webinars, and you can go on there and watch those at your leisure and still claim your continuing professional education. Also, highly encourage you to stay engaged with the ATO. We'll share some details after the webinar on some ways you can do that. Obviously, you know the website, ato.gov.au. There's also the Tax Professionals newsletter, which I encourage you to subscribe to, but we'll share some more links after this session today. And then just to finish up, I do want to say a big warm thank you to Michael and to Adam for providing all that wonderful information for us today. And thank you to Christian and to Rosette for helping out with the questions. You're kept very busy in there today. And I will just note that, as Michael said, we did get a lot of questions. So if we didn't address yours today, please keep an eye on our website, and we'll have some FAQs available there to answer anything that we didn't get to today. Just finally, we will launch our exit survey following today's session as well. And it's a really quick survey, but it is very, very useful for us to know how we went today. Also, any topics that you are interested in hearing about in the future, let us know about those. We will endeavour to get those included for you, and that will just pop up in your browser once you leave today's session. So once again, thank you to everyone for coming on board today. We have really enjoyed sharing these insights with you, and we hope to engage with you all again very soon. Enjoy your day, everyone. Thank you.
Thanks, Jodie. Thanks, Adam. Thanks, everyone.